Hello, everyone, and welcome to another edition of Chart the Markets. And happy Thanksgiving to everyone. I'm sure this is a very well-deserved Turkey Day for everyone. And today is all about Turkey crypto charts and all the trimmings. So before we get into the thick of it, I'd like to send a big shout out to my friends at FEG Token and SmartDefi.com, and of course to our exchange partner at BYDFi. And if you run over to BYDFi, enter the code capital K 5, capital Z 4, capital T, lowercase p. That gets you eligible for your new user bonuses, and it's an email only sign up. And again, thanks to the Fed Token and Smart DeFi crowd. We've known each other for a very long time, and those guys helped me set up my first crypto wallet when I didn't even know what that was. So that goes to show you how long I've known them, and a special thanks to them. What you're looking at today is the Bitcoin daily chart, and we're going to spend most of our time today on our crypto charts because they are live, and I think it gives you guys an opportunity to kind of take over this stream today and just focus on the stuff that you love, and whether if it's Bitcoin, great. If it's ETH, great. We're gonna dig deep into it as much as possible. So this chart's no stranger to us, and if you've been in here more than once, you kind of understand what you're looking at here. And this is obviously a bearish trend, and it's a series of large moves down, slight retracements higher, followed by larger moves down, slight retracements higher, and so on. And that's a series of what? Lower highs and lower lows. Okay, that's really the anatomy of a breakdown. And when you see it like you see it on this daily Bitcoin chart, it makes you look at moves like this with some caution. Right? You don't want to be, I'm not trying to be negative or not get excited, but you don't let the lows get too low and don't let the highs get too high. Try and maintain an even keel as much as humanly possible throughout the ups and downs. And one of the ways I manage all of that is to just simply listen to the chart now. Let the chart tell me what to do. And on our daily chart, what are we really waiting to see what happens here? We really want to make sure that this just isn't one of these retracements higher followed by another leg down that takes out the previous wave's low. That's really the caution here. And I try and look for the risk first, right? Because if I don't, is all I see is all I end up looking at is the opportunity, and then I'll step in something, right? So the caution is to confirm that what you see here just isn't another retracement higher, a series of green candles in what turns out to be a continuation of a downtrend. Right? That's really what we're waiting for. So we're waiting to see if we get one of these kind of buy signals like we see down here and over here. Right? That would be the confirmation that we're looking for, that hey, maybe we're onto something. And you can see, look, this is several days, almost a week of price moving in an upward direction and still no signal. And that's simply because the impulse down dragged that shorter term average with it, because the shorter terms react or respond quicker than the longer terms, obviously. And it took a lot to bring it back up again. And even after 5 or 6 days of positive price movement, we still don't have a signal yet. So what are we concerned about? Let's add some context to this chart, right? So our script is doing its thing, telling us that this downtrend is still intact, right? That's what we're learning here. It's the market talking to us. So let's throw on, that's the 20-day moving average, and that's the 500-day moving average. And you guys know that I use long-term averages on my charts. And there's a reason for that. Simply because it helps create ranges on smaller time frames, but it also points out solid support and resistance on your like daily chart, like you're seeing, for example. So this caution that I'm talking about here is primarily because this is the upcoming resistance on this chart. And what is this? That's the 20-day moving average in the 500. Is it the first touch of the 20 since it broke? It would be. Is it the first touch of the 500 since it broke? It would be. And those are high probability rejections. Or at the very least, you might get a bit of a pause. But because we're dealing with these two major moving averages, I would be more inclined to think that there would be a little bit of a pause or a rejection. And that's part of the reason that I'm expressing this approach with caution kind of point of view. The upside opportunity is, hey, maybe this is a bottom of this wave, right? Because we have three choices: up, down, and sideways. Always remember that, right? If it starts to feel a little cluttered in your head, just think of that kind of up, down, and sideways thing again. You got three choices, that's it. If you break what is expected resistance, but if you break it and you get up into this gappy area here towards the lower value range, you could expect price to move quickly. That's the upside opportunity. And to validate that, again, you look at the lower value range because that will be a draw for price. And then you have the 50-day moving average, which will be a draw or a target for price. So to the upside, the opportunity is, break through this immediate resistance in and around, 90, let's just say 94 to 93 range. And if you can break that, then logically you'll run towards this lower value range and the 50-day moving average. And when you get there, same rationale applies. Will it be the first touch of the 50 since it broke? Yes. You could anticipate a rejection, or there's a high probability of that. And this is why nothing goes straight up or straight down, right? Because you're looking at smaller time frames, so I know a lot of you do, and in the process you think, wow, this could be a bottom. Maybe we won't see price back down here again. If it starts to take off, it's just going to run and run and run. Well, no, it doesn't, because this is what's really happening on the daily chart. Big move down, retracement higher, could be followed by another big move down. The ebb and flow of money doesn't stop. And if you're using too much leverage on too short a time frame, it will swallow you up. Right? It's just kind of like a tsunami of obstacles in front of you, and it will eventually swallow you up. So that's the upside opportunity. And of course, you break through the 50, you look to the 200, and we show this when price rolls over, break one level, find the next. And that's exactly what you're thinking here to the upside now. If this is the end of this leg, and you can break through this, although you failed to do it these times, right? But if you do, you start looking to the next leg higher. If you fail here, this becomes that failed breakout that we show, and you roll over, and then you take out the previous wave's low. And essentially, that's what these were, right? This is a failed breakout, and price came down and took out the previous wave's low. Here again. And this is just kind of what we're waiting to see. But because we use multiple time frames, or more appropriately, that kind of fractal analysis, what are we going to do? We're going to look on the weekly as well, especially in times like this when it feels and appears that there's just complete and total chaos. Right? I find that if you have different views to base your analysis on, and it doesn't have to be 20 different views, it can just be a handful that is really all you need. But I'm going to use this weekly Bitcoin chart because there's a lot that we can show some really nice examples from. So we talk about the importance of a volume profile on a chart. This is one of the more simple things that you can do that will make a difference in how you interpret what's going on the chart, and I strongly advise that you use a volume profile, and here's why. It's going to show you where the trading has and has not been, and it's also going to show us the density of the trading. So this blue area in here, this is dense trading, this is dense trading, this is the most dense trading down here where the point of control is, and that's that thin red line. This, where it's gray, is just much lighter in volume, meaning that there's not really a lot there to hold price up, as you can see, when it tries to test those levels. But one takeaway that you can look at real quick, so here's your upper value range. Much of what we're doing is just based on levels because of where price has and has not been, and what current price will be attracted to past price. So this breakdown on the weekly Bitcoin chart, we broke the 20, we found the 50, we broke the 50, and where did we start to find a little bit of love? Right at the upper value range on the volume profile. You know, you wicked through it and prices kind of bounced. And these are the little tells that you can gain by using a volume profile. You can see how it respected it here. It also tagged the 50 and bounced, but I mean, you got price support from it. And that's the market saying, hey, I know I'm running hot, because again, this is, think of this as all new price exploration. That's what this was. It knows it's running hot, but it's still confident enough to move on. And what I think, so, you know, price came right back to the upper value range, and the market said, you know what, okay, let's try this again. At least that's what this candle suggests. This candle, or the one that follows it or after that, what does it have to do? It's got to take the 5 EMA in red and the T line, and this is on the weekly chart. But does this look very similar? And remember what we know about fractals, right? What you'll see on one time frame, you'll see on another. Does this kind of look familiar? This kind of look here? Is this just the first leg down on the weekly with a retrace upwards only to find resistance at the T line, the 5 EMA, or perhaps even the 50? And then, so you have like 2 or 3 green candles, and then the trend down continues. And that's why when you look at a daily chart and come to one conclusion, it makes sense to start to look at these other time frames as well to make sure that you can validate what you're seeing. So on this weekly, we've broken all our support, and let's remember now that support is resistance. And we're not going to blow through it all in one candle. And I think that's sometimes forgotten. There is some real effort to breaking through these levels on the way up. And it takes time. And sometimes it's a lot more time than you would like. The risk to the downside, right? So we know what we want to challenge to the upside. But again, I caution that this is, you know, first leg down on the weekly, followed by slight retrace higher, and then, you know, that could be the setup. If that's the case, these gaps are very concerning. We know price likes this level, right? We know it likes this level. If it was to come back and roll over, it would be drawn to that level again. And we've shown other charts where this type of thing has happened several times. But if you break this and you start falling into this gap here, and you've got all of this past price, this bench here where buyers and sellers have shaken hands in the past, it's going to get a little slippery. In fact, let's just quickly, I just want to throw in the 100 MA. There we go. So in other words, not only were you getting some support from that upper value range, you're also getting it from the 100-day moving average. 20, 50, 100, 200, 500. That's the first touch. When did you break it? Back here. Broke a whole bunch of stuff back here on the way up. Remember, see all this stuff twisting together? All of your major moving averages are twisting together in here. And then boom, you went parabolic. And as a result, you spreaded them all out. And when you spread them all out on the retrace, these tags feel pretty intense. But what happened here is completely and totally expected from the point of view of how we look at price on a chart. Broke one level, found the next, broke that level, found the next. Now we're just getting somewhat of a snapback higher, although I don't like the fact that we haven't challenged these levels, because I interpret that as bearish even though it's a green candle. If it knows what it wants to do, believe me, it's going to run for those levels, and it's just not quite there yet. Doesn't necessarily always happen in one candle, I understand, but that's the work that needs to be done. It's just levels. Break one level, find the next. Break one level, find the next. Break one level, find the next. And don't think that all of this past price here won't, look. Just for fun. And it's all I'm doing is really just trying to average, where we've been. But let's just see, will our 200 MA, will time and price come together and meet somewhere where they've met before? We're going to find out. Or, do we bounce at this level and try and take out previous waves high, or at least structural levels and major moving averages? So we're not out of the woods yet. Like, it's nice to have a green candle, but we're certainly not out of the woods yet. Not an accident that we came back to this level here. And that's, again, this is Bitcoin Weekly. I don't think ETH looks too different. Did we break one level and find the next? Did current price revisit past price? Yep. Whether it's a breakout or a breakdown, that's what price is looking for. The next level, and when price recovers on this daily, it's going to find and go to one level at a time. Is the 50-day moving average a draw for price? Yes. Is the 200-day moving average a draw for price? Yes. If you can get through the 20-day on the daily, I would be, very optimistic about trying to find that level. Here we have our first buy signal on the daily chart, and this is just looking like a little doji, so it's a little bit suspect, right? But let's just turn back to the 4-hour. You really could have been ahead of the game and been in this trade on Saturday. What's today? Thursday. Now think about that for a second. You could have been in this trade on Saturday, and when you entered it on Saturday, you would have been moaning and bitching that you gave a little bit away because you didn't catch a bottom or something like that. But did you really? No. Didn't give away anything. Right? If we go back to the daily, there's Saturday. On the daily chart, you look like a genius. because that's the candle you would have entered on. Right? The 4-hour chart was telling you to enter on this day. And when you look at this daily chart, I think it gives you a beautiful level of where to set a stop. Like, look at the base of these 3 candles in here. They're all equal. From there, obviously, you can raise it as price rises. But I mean, isn't that pretty clean? And this is why you're using multiple time frames, so that you can set yourself up. Just wait for the right setup. I'm using 4 hour and dailies as the example here, but could you use 15-minute and 1 hours for a different type of trading? Sure. But as all I'm trying to show you is, I know I tell you to wait for the appropriate signal because it is the right thing to do. I'm just kind of letting you in on a little cheat code that I use because I'm comfortable with the multiple time frames. So if I'm the daily, I'm always looking at that 4 hour and maybe the 12 hour, but to see where I might get an entry. So this is after a big move down, finally get a buy signal, and you're like, okay, I got nothing to lose. It's a low risk entry at that point. And you can exit at any time, and because you're using stops, you're mitigating any risk. And the chart just, your T line and 5 EMA diverge, and boom, you're off to the races. And now you're less concerned about what happens at resistance here. Because if you enter on this candle and then you tag the 20 or something like that, and all of a sudden you get a big red dagger, it's not so bad, is it, when you enter down here? Because you still have cushioned yourself with a ton of profit. If it breaks through, however, well, that might be a runner. And I know the job is not to catch tops and bottoms or anything like that, but I find it very helpful when your main primary chart is the daily, like this example, to dial that time frame back a bit so that you can kind of see inside that daily candle and daily price activity to get an understanding of what's going on. So that, like you felt late on the 4 hour, no you weren't. Especially when you look at the daily. Right? This was an early entry into a confirmation, and if it runs, that's the trade. Those are the trades that you dream about at night. And once it starts to run in the direction that you want it to run, which is in this case higher, let's assume it was coming out of this wave in here. How would you manage this trade? Right, now that you nailed the entry, how do you manage the trade? Well, you're just going level by level, obviously paying attention to, like you can see here, you paused for a bit when you hit the 500 on the daily, like literally to the penny. So it's just level by level, but use the guide for trend that we have, which is the T line and the 5 EMA, to help you manage the trade. So you got a great entry. Now what do? Well, you just let the chart guide you. Expect resistance at major moving averages, volume shelves, things like that. And when the chart tells you that it's time to reconsider, then you reconsider. Nothing goes straight up and down. Now, if you were trading this chart and you were well into this runner on the daily, you would also be looking forward, because you would be trying to get an understanding of what that longer time frame, as in the weekly, was looking like. It was a big run. So just use the levels. Everything is level by level, right? Try and tell me that this isn't about levels. Of course it is. It's right in front of you. It's all about levels. Price will go where it's been before. The challenge for many is just getting on the right side of the trade/trend. Right? That's the challenge. But it's really not all that hard to do. When you're trading above all your major moving averages, like in here, are you bullish or bearish? Pretty darn bullish. But when you're trading and breaking them to the downside, that's obviously bearish. Just peel back the onion real slow. But all the answers are really on the chart. Let's go to B&B for a second. It doesn't really look all that different from ETH, does it? Where you've got level, price finds the next, break the level, price finds the next, break the level, price finds the next. All of your major moving averages twisting together like this. You know, if and when price breaks out, it's usually in a significant way either up or down. In this case, it was up. Same thing happens, parabolic, spread out all your ranges. And then, of course, this is when everybody thinks we're crazy, right? Because you'll show them this chart. And price just has gone up and up and up, and nobody wants to think about the downside. Because for whatever reason, you know, they're afraid to trade short, or, you know, who knows. But the job, again, as a trader, is just to monetize the chart. So we're trading, just like we showed before, above all our major moving averages. We're obviously bullish. But at some point in time, you're going to come back and tag them. And when you do, they're either going to get support or they're going to fail. Right? So support, price moves on, support, price moves on, price moves on. Now we're starting to print some weird things. And price has had another parabolic surge. So you've come back and you've tested the 20-day moving average just like you did several times before. Now we print a sell signal at that same average. And you can see what's happening on the right side of the chart is this divergence and slant to the downside. So the chart's starting to open up and tell us that, hey, there might be some momentum here. Where does price go? It broke one level, so it found the next. It found the 50. Few green candles, but what do they mean? Ultimately, just took you right back to the 50 again. Here's your first test of the 20, right? We talk about how the first tests have a higher probability of failing. Do they always fail? Of course not. But statistically, do they fail more frequently? Yes. And, you know, here's an example. Your price failed the 20, came back to the 50, so you know, or at least in kind of my world, price will range either, if it's going to bounce from the 50, it's going to range to the 20. That's kind of what my anticipation is, right? It's going to oscillate in that range until it either breaks out or breaks down. And yeah, we did print a little bit of a buy signal here. And this is where you have to use your skills and your knowledge, like pull those things out of that toolbox that you have, to make sure that, you know, when you see something that might be a little contradictory. So you have a buy signal, and you see it coming at resistance. That little voice in the back of your head says, just be aware, I'm longing into resistance. That always isn't necessarily a great idea. Because we know that when we long into that resistance, that we could do this. Right? What did we end up printing here? This kind of ugly doji with no real body to it at all. Failing at its first attempt of the 20-day moving average. And then what do we do the next day? Well, we print one of these. If we take all of that out, is all that happened is price bounced between the 20 and the 50. You knew that a decision was going to be made as these two averages closed in on one another. You knew that was going to happen. This is just the way it is. It's like that triangle. It just kind of traded into its own little wedge, and you either break out or you break down. Did we have any clues on this chart of what might be coming next? Did we have any little bit of an advantage over somebody else? Yeah, we did. We were being told that the trend was still down. And, you know, you got to trust your charts. Right? Like, if you can't trust what money's doing in real time, what can you trust? Right? Just follow the chart. And this is another example. Oh, I got in at a good time on a short trade. Let's just back this up. This is the 28th of October. Let's go to the 4-hour. Where's the 28th of October? Where are we? Man, I gotta back up. Here we go. Here's the 28th of October. Right in here. We got a little bit of a heads up that maybe there was something going on. Oops. Level by level. If this rolls over and finds resistance at the 20, what would you expect? You would expect, again, to, just like here, price kind of fails to break out, it rolls over and takes out the previous wave's low. That's what you can expect. And if it was to do that, it starts to do what again? Well, we've broken this level. The fact that, you broke out, and then revisited it to the downside, taking out the low, would actually be a little concerning, making you suspect that it might want to try and visit the next level down, which sits near a gap in light trading. The list goes on. So these are the things you have to be aware of, but they're not impossible. Whoops. There's the weekly. On the weekly, you can see you've got that big leg down, and now we see kind of a green candle showing us a little bit of a sign of life, and it comes where? In an area that it's been before. When price rolls over like this, for when this happens the next time, and it will happen again, price will just look for areas that it's been before to rest. And when this happens to you again, and it's been a parabolic move to the upside as an example, then the retrace down will, those levels that you see, they're not lying to you. They may feel irrational, but they're not lying to you. As long as you're trading below the T-line and the 5 EMA, in my world, you're in a bearish trend. And a lot of bearish things can happen to you while price is trading under those levels. So what we're waiting to see on this BNB chart is this the first wave down, followed by, a slight retracement higher, only to kick off the next leg down of that move, and then tag the 50. I don't know. We're gonna, we'll see. As my father used to say, we'll see. Let's look at Aster. Let's just look at its daily real quick. It seems to have a bit of an allergy to the 50-day right now. And there's not a lot to go on here, obviously, because it's a relatively new issue, but you can see, even on new issues, does price respect certain levels just like it does on the weekly of something that's been around for a decade? Sure. Because this is a representation of what money's doing in real time. And it's all based on mathematics, and math is a language, and the chart is speaking to us, telling us what we may, what we can expect based on what we're looking at any given time. This is the 4-hour. We're just not getting the sustained price movement, are we? Like it just keeps rolling. It pushed, yeah. Nothing goes straight up or down, but I mean, breaking the 20, breaking the 50, right back to the 200. Now we've broken the 200, and you're sitting on what? The point of control. And I know this is repetitive stuff, and we show it on different charts on different time frames, various different assets. But if you were looking at this 4-hour chart, as many of you were, and you're using that the volume profile, you're going to see how relevant the point of control is, and you're going to be watching price here, 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 and here. Find some support here again from that level. And, again, not a ton of price history here, but I think it's telling us something, right? If we fail this, it's going to be a problem. And the 4-hour chart right now almost feels like the true daily, doesn't it? But this is a level that you want to keep, because if you break it, you're going to find yourself testing these lower value range, and perhaps you might be looking at lows to the downside. Somebody's got a hot mic. I think Be Free might have a hot mic. There. I know it's Thanksgiving and everyone's having a party, but we can unmute you a little bit later. So nevertheless, point of control is holding up price here on this 4-hour. Fail this, and this is going to be a problem. There's the 12-hour chart. So we've failed the 50 on the 12-hour chart. So fail the 50 on any time frame. That's not good. Fail any support level is not good. But I mean, what could we be doing here? Are we just the impulse down? We talked about going sideways back to 5 EMA or the T line, and then price rolls over again. Is that what we're looking at? Like, we don't really see any momentum coming into this thing. Until we do, I think the pressure to the downside is still there. Like, this is wave down. These are your retracement higher candles. Wave down, retracement higher, wave down. Like, we're rinsing and repeating here. And if you break the point of control, instinctively what's beneath and above it is a gap, right? Because the point of control is the kind of center point for the majority of volume. It's like the equator. And you break that into this gap, this is the next low down. It's just basically low by low. So that's not really a good look, is it? Let's look at Solana. If you guys want to jump in and stop me, go ahead. But Solana's giving us a look at something that we've kind of talked about already on the Bitcoin chart. So these levels, as you know, because you've seen our streams before, we've dropped in here, and what we're trying to do is just kind of create levels for ourselves where price has been before, all through here, because we were suspect that it might want to pull back to this level, which it has. Is this the first touch of the 20? And are we being set up for a rejection? Like, we kind of talked about this possibility on the Bitcoin's daily. So, we're seeing this look on Solana already. It doesn't mean that it's going to roll over and come back down to here, but I'm just saying it's certainly not blowing through, at least not yet. So this is why we're suspect and we're cautious when we're longing into resistance. But again, this is Wednesday. Let's go to the 4-hour. Our 4-hour signal here also comes on Saturday. And this is the advantage of great entries, right? A lot of what you're going to be doing, or a lot of the money that you're going to make, fingers crossed, is because you have mastered getting good entries. And I think if you were to, and this is why I like these 4-hour entries, if you were to take this, and as you start to see the resistance that we're getting on the daily is coming here at the 20, because you're ahead of the game, you can feel a little more comfortable hanging around to see what happens. Like if this really does look like it wants to break, roll over and let's say break the T line to the downside, well, we know what's going to happen, right? But because you're ahead of the game, you can afford to wait. And I guess what I'm getting at is if you see this red candle, this red current candle here, see how you got support from the 20, support from the 50, support from the 20. This is your entry. Are you prepared to see if you get support from the 20 again in a bounce? This is the luxury that you bought yourself by having a really good entry. You can allow the wave to unfold because you're ahead of the game and you don't have to make what might feel like a quick and irrational decision in the event of catastrophe. And so on this daily chart, if this was our entry, but yet we failed because we're longing into resistance and this is the first touch, if you entered on this candle, you don't have a lot of time to think about what you're going to do because you're being hit with a retrace potentially just as you're entering. Right? And that's, again, why I really like that 4-hour chart, is because it allows us the safe entry on a slightly shorter time frame, but it's often in a little bit of a window in what's coming on the daily. So this had a really nice move. And have you printed a sell signal yet in here? No, you haven't. So this is still a very bullish chart. But because you have a good entry, you've afforded yourself the luxury of patience to see if this is just going to be another slight retracement in what turns out to be a continuation of an uptrend. And throughout this whole process, I'm assuming that you might be adjusting your stops so that you're kind of protecting the profit that you've earned thus far. But these are just little things that you're going to look at. Is this structural, this level that you're at right now on the 4-hour? Kind of, right? Like you can see all this basing over here. It's not an accident that we're doing a little bit of a dance in here because that's what went on over here. There's a little bit of price there that you got to eat up. What's the upside to this chart? And there's a significant one. This big gap, right? If you can get into this gap to the upside, then price is definitely going to want to try and challenge for the point of control, because that's the most concentrated place where price has been before. And, time and price will come together, and I bet you find the 200 up in there too. And this is how we create targets, right? There's our 4-hour chart. We finally get a buy signal. You knew it was at resistance, and of course, when you're recovering, that's going to be the case more often than not, obviously, because you've broken so many levels to the downside. Now you got to beat them up to the upside. But there's your signal, and there's the divergence in the T-line. Nice big green candle at a major moving average. A little bit of resistance at the 50, which you would expect. You don't want it to break the 20. It's going to oscillate between those two levels. Boom, you break out. Never once did this divergence crack to the downside. As much as price is important, the older I get and the longer in the tooth I get, this means more to me every day. Being able to manage and know what the chart's telling me so I don't get freaked out by red candles. That's the better part of a day, right? Like, for all your waking hours on that particular day, you're going to see a lot of red. But the chart was telling you that, yeah, it's just a lot of red. It's nothing to worry about. And here we are, and we're still bullish. Keep an eye on, if you're trading Solana, this volume gap. And if you're not using a volume profile, throw one on, give it a try. Right? I don't even touch, you don't have to change the settings or anything. Just throw it up. Right? Allow yourself to see where the money has and has not been. Because I tell you, and this 4-hour Solana chart might be a little bit of a test for us, but if you can break into it, it'll show us how quickly it'll scoot up to the next level. And that's why we trade, right? So that we can monetize the chart. I take this volume profile off, I lose a ton of context. And maybe it's because I'm very visual, I'm not sure, but I think it adds a lot more context when you can see these big gaps. And as price is moving higher, like we know that on shorter time frames, both the longer and shorter MAs that we use will help frame in price. And you can see it starting up here on the 4-hour. Right? This is going to be the upper range of price targets on this time frame to the upside. And it's just a matter of taking them one at a time. I hope that makes sense. I really do. Because this is money in the bank. Like this is, I'm glad we're looking at this Solana chart because it really is a textbook chart to outline the opportunity. You got right where we anticipated support, you got it. Got a signal. Started, got the divergence in the T line and the 5 EMA telling you were going in the right direction, and price started moving upward, dealing with the resistance as expected. There were no complete and total failures. Yeah, did you break or did you get rejected at the 50? Yep. You didn't break though. Just broke, came right back to the 20 and bounced. That's perfect. Let's see if we get in here, because if you guys get in here, I think it could be fun. And then you start breaking things to the upside. What would be the next level after the 200 and the point of control? Obviously the upper value range. Previous waves highs. Those levels are benches of past price. And it will go there and won't stay there. Right? None of these scenarios include price going there and then sticking and never moving again. It's not how it works. It's just this constant ebb and flow of price. Let's look at Zcash. Right, the privacy coins, and I like these things because it helps demonstrate what we're trying to show you. All of your major moving averages twisting together, and then bang, the big explosion comes. And even through like some volatile times with big red candles, you still got support from appropriate places. It just had to retrace hard to get there because it went up so quickly. And if you can take anything away, especially, in the crypto space, price will do exactly what you're seeing here. And everyone's excited about it, and it's all they want to talk about. But understand that it never lasts forever, and price does retrace. Retraces don't mean bear markets. They don't. They're expected and anticipated. A retrace is expected and anticipated to come back to a major moving average. The horse doesn't like to get too far away from the barn. It did. It came back, tagged it, and went out for another run. Now you got a situation where you have equal points in price on the daily. You can see the wicks of the upper value range, and that's the market saying, hey, you know what? I think I'm done for now. I've given you a lot. I've stretched my willingness as far as I'm willing to take it. And this is, for now anyways, where I'm willing to go. Candle, 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 and I start to fade. Whether, you know, if you're a trader, if you took a short trade to the downside, this is an appropriate area to do it. And because you went parabolic to the upside, the downside moves are going to feel crazy. Did you break the 20 here? And a lot of people don't want to admit, oh, you know, this thing's just too bullish. It's the next Bitcoin. I don't know. I don't really know much about it, but it doesn't really matter. It's just a chart. Was the T line and the 5 EMA telling us what price was going to do? No matter what the people on social media said? Yep. Charts don't lie. Real-time representation of what money is doing, not what people are saying. Even me. Right. Like, if I was listening to me, I would simply chart myself. Let me figure it out for myself. I'm not going to go off of what one person says or a group of people say. I'm not going to be a sheep. Learn. It's not that hard to do, right? It's really not. It's just a lot of repetition and putting a few things together at the right time and place. But once you've done it a handful of times and you can kind of check the ego at the door and listen to the chart, do what you're told, you won't really be surprised very often, or at all. When you see price doing this and the divergence between the T line and the 5 EMA, don't think of making a short trade, because you're literally, stabbing yourself. You just are. When you're trading below, don't think of making a long trade, because the trend is not your friend in this case. Are there trades there? Yeah, okay. But I mean, long-term chart looking? No. This has been a bullish chart for quite a while, since September. Early September. And it's maintained it. And it's retraced. It's just coming back. So now it's broken the 20 for the first time. What do you think it's looking for? It's looking for the same thing charts look for on a 15-minute, a 1 hour, a 4 hour, and everything else in between. It's looking for the 50-day moving average. Where's that 50 sit? In the middle of this big-ass gap. So this is going to be fun. Fun, fun, fun. Till your daddy take your mouse away. Because this is a trader's opportunity. This big, massive ranges is a trader's opportunity. Full stop. I'm not married to anything other than my wife, but certainly not what I see on a chart. I could own a ton of this. I'll tell you, when I see this kind of thing, I'll be the first one to short it. My job is not to fall in love with what's on my screen. It's to monetize the chart. Fall in love with the outcome of the monetization. Right? You just know lower value range here, point of control up here, and the 50-day moving average a mile away. You know that's a gap, right? What's ever below the POC or above the POC is gappy. In this case, it's super gappy. How does this gap get created? Does anybody know? By what you see in here. So this parabolic price, these candles, although nice and green, are filled with fairy dust and air. So when we come back and to test these levels where those candles are that created this big gap, there's not much in them to hold price up. And that's why when you throw fibs on these charts, I don't even know where to start this. I'm just going to start it down here for interest's sake. Okay, so there's 50% in and around the 500 or the 50-day moving average. I don't know if this is fair or not, but it doesn't change much. So that's 50%, which would be totally appropriate. Here's 618. Lower value range. So when your fib levels are showing you something, your trend indicator is telling you that you're still in a trend to the downside. You know that you have these big gaps below you. Is it unreasonable to think that price just might find one, some, or all of those targets to the downside? Not to me, it's not unreasonable. It's completely reasonable. And any trader would tell you that. Right? Because they understand that nothing goes straight up and nothing goes straight down. And that price can come back to these places that we think and feel are irrational. You don't think the bottoms of these two candles and the tops and bottoms of this two candle are important with the 50-day creeping in here? I think so. I think they'll be relevant. I think what we'll see is current price in the midst of its trend move to the downside. Look at this big green candle. It thought it was all that for a little while, didn't it? Popping through the T-line, popping through the 5 EMA, only to do what? Close below the 20, the T-line, and the 5. Was that a bullish candle? Not for me. That's a bearish candle for me. Simply because it closed below the 20 and its attempt to break through the 50, or sorry, break through the T-line and the 5 EMA failed. And the divergence between the T-line and the 5 EMA was still pointing down. The market was saying, hey, I'm trying to tell you something. Don't get sucked into someone else's tornado. Read the chart for yourself. This has been a fantastic move, and you got to congratulate anyone you know that was able to monetize that run. Right? Because that's what decent human people do. They help their friends, and they congratulate their friends when they've made good trades, right? We support one another. But we're objective at the same time. Right? Was fun monetizing the chart to the upside? You can either sit and watch, or you can monetize it to the downside. Okay, so on the weekly chart, what's happening? Well, we're breaking that upper value range. That was the level that the market was comfortable saying, hey, you know what, much more above this, and you're getting a little ridiculous. And we've seen things trade above those levels for long periods of time. But notice how light the trading is in those areas too. It's pretty light. So now price is coming back. And as we would expect, first level is the 5 EMA. Just like these, right? Price came back, checked the 5, and then went higher. But we've broken it. So now we're going to come back and check that T-line on the weekly. Remembering that this level on the daily was just kind of the base of these candles in here. It's not irrational at all to see price come back to this level. What's going to feel really uncomfortable is if you come back to something like this, right, where the 20 is in here. There's not a lot to create, bases on here, but the 20 will be a target. There's nothing else here, and I'm sorry, but it feels like a big giveaway. It very well could be. Let's just do this real quick. Well, there's 618 at 314, and 50% is basically at 400. That's the level, the base of those candles on the daily chart, that level in here. We never know what comes after the current candle we're working on. Is all we can go and use is what we see at, at the time. But we use fractal analysis to help us get there. Gotta love these privacy coins. This is Pirate Chain. And again, I don't actually know a lot about Pirate Chain. I just know it's another one of the privacy blockchains. But does it chart very differently than Zcash did? Not really. Big impulse move up, obviously a big retracement here, but where did it find love? Through here, where it's been before. Current price will look for past. If you were looking at that chart on the daily, it feels like a complete and total capitulation. And it was looking for past price for support. And lo and behold, it certainly found it. That's obviously a giant candle, but this kicks off a massive move, right? Bounce. Notice how on the retrace, you come back to the very same levels, right? Break the 20-day, find the 50-day, break the 50-day. Let's throw up the 100 to be fair, right? We don't want to leave it out. Look at, there we go. We don't know what we're doing. These levels mean something, right? They're telling you where price has been before. And once we understand that, so, okay, price has been here before. Now we start turning the page and going, okay, what does it mean when we find support while in the midst of this downtrend with this gap beneath us? And it's, we're just layering context onto our chart time and time again. If you fail this level, right, this just could be the pause you're getting, right, because it's the first time you've seen it since you broke out of it. So, you're getting some support here, which you would expect to get. You have not got a bounce, though. You haven't had a capitulation, but look at, can you break the 5 EMA? No. A lot of wicks to the downside here. If this breaks, it falls into this gap, and it certainly comes back to the 200, and more likely, it'll find the point of control. The volume profile is dynamic in the sense that it is always moving. So if you were to look at a 1-minute chart, for example, you will notice from time to time the upper value range, maybe the POC, and lower value range might look as though they've ticked and moved, and that's because it has. And so it does continue to move around. But the daily will stay very consistent. This is still a downtrend, a little bit of love from the 100-day, only because it's the first time it's seen it since it broke it. But it's not changing trend, which with this gap here would make me believe that it wants to still visit things to the downside. What could that possibly be? How about the 20 at 32.71? What's 32.71 on the daily? Yeah, right in this area here. So it kind of puts it in purgatory between these two levels, which would suggest it still wants lower. Let's look at XRP. We cannot forget XRP. This is, one of the things I credit this space for is the positivity, right? So, everyone finds a way to stay positive, which is typically a good thing. You can see here that there was some sort of a move happening in XRP, like trend-wise, for a bit. I'm just going to drop that in real quick. Like, you were making these lower highs leading up to that day. right? So what's on our chart? We just have some levels that we've created before: 20-day, 50-day, 100, 200, 500 day, and then the amber's 1,000-day. But you can see that this thing was trending down before the big capitulation hit. So to say that, oh, it just did it overnight isn't really true. Right? It didn't happen overnight. It had been happening for a while. And right from this, like when it failed this in here, and I remember being in, talking to some people even in our group that this move wasn't finished. That, we felt there was more downside to come. And the weekly chart really illustrates that well. That's the big move down that we got on that one Friday. It's represented, of course, in this one weekly candle. But notice that on the weekly, once this divergence opened up, that there was no indication whatsoever that price was reversing. Even this, that green candle is all it did was tag the 5 EMA. It didn't spike like this, change the trend at all. It didn't do any of that. It was just a green candle, and what we were being told was still a downtrend. Now you fail the 50-day. And yeah, that's a problem when you fail the 50-day. This 215 level we had as a target because why? All of this past price here, we were just trying to line it up. Just like we did with these levels in here. And here's your 100-day finding its way into that 160, 181 level. Is this still a downtrend on XRP? Yes. Right? And I'm not saying that because we're trying to be mean or anything. It's still a downtrend. We've broken one level, we found the next. We've broken this level, I believe we're looking for the next. And it's just like, look at all of this structure, this in here, in between these two levels. There's a lot of price here, and that's why we're here now. Because price has gone to where it's been before. That's where it feels comfortable. And if it continues to fail and doesn't reverse, you just keep looking for the next level down. It doesn't matter what it is, any asset, any time frame. Just keep looking for the next level down. I know what I was trying to show you. Doge. Someone asked me to look at Doge. Isn't it amazing how price always seems to find the point of control? Like, I'm sure you've noticed, doesn't matter what we look at, it's like lo and behold, somehow it always seems to find it. In this big rollover, when price went parabolic, did it crash hard? Yep. Right back to the 200-day, 100-day and point of control. And, where does the retrace bring you? Right back. Like, that's a round trip. This is what you don't want to do. Right? You don't want to just hold on to stuff only for it to come back right to where you started. You have to take profits. Right? You have to. And if there's anything else you want us to look at today, shout it out. This is Monero. We've looked at this chart many times. And it is still moving higher. Is it trading above, the 20, the 50, the 200, all of its major moving averages? Yeah. So it's got a lot of support. Is it approaching a level of price history where it's been problematic for it before? Yeah. It's moving into that neck of the woods now. And I just want to look at this on the weekly if I could. So
Hey fellas, hey Blunt,
Hey, how you doing?
pretty good. Can't complain. Can you go over gold?
Absolutely. I will do that. Um,
Okay.
yeah, so XMR still bullish. Look at this big wick, comes right back and tags the 20-day and then pulls higher. Bullish chart, but if it breaks down, look to these levels to the downside, just like on everything else we look at. Gold. All right. So here's gold's weekly. With all of the talk, over the last little while, if we look at the daily, we'll probably get her through this stuff in here. The word was gold's done, gold's dead, blah, 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 sell your gold, all that kind of stuff. I don't really have that kind of sentiment. I think this is, do I like the lower highs? Of course not, right? Like, we all understand what that means, but is this trade done? No, I don't think so. Like, look at the weekly. Like, this is still a very bullish chart. We don't have a sell signal in here anywhere yet. If we start to have issues with this level here, then maybe it does retrace. But I think I think it wants these highs again. Actually, is what I think. And this is all price exploration at this point, right? Like, there's your your monthly chart. It could do this, right? Didn't
I'm look,
here.
yeah, I'm looking for a retracement for like a nice little correction for going ahead and creating a new high. Actually,
Yeah. Well, if this was to break down, it'd be interesting to see. It gets a lot of support when it hits the 20. So that might be your test on the weekly chart. Like, it's not very noisy at all, the weekly chart. It's pretty clean. But, you know, this has been a great trade. You're still trading above the 20. Again, I don't like the lower highs, but um, it's still bullish, right? That's for sure.
yeah, it's a lower high. I really want to get some options, some call options on it. That's why I'm waiting for um that retrace because I think it's gonna come even if it doesn't happen immediately, or even if we take out not the main high, but the previous high,
Hmm.
the previous lower high, yeah. Even if it takes that out and then decides to come down for a retrace before making that next leg up, because I don't think there's no way gold can be done with that. After that massive um bullish impulse to the left, like I feel like all this is that we experience right now is another correction before seeing another high. I just want a grand opportunity to get in on it.
Well, you've got a plan, and that's what I like about what you're telling me. Um, you've thought this through. Like, I can obviously tell you've thought this through, and you've looked at this chart on multiple time frames, and I think you have an idea already of where you think it might be a good entry. Right? And that's exactly the kind of stuff you should be doing. Like, I don't think you're tracking 50 tickers, right? I think you're tracking a handful of tickers and getting to know them intimately on various different time frames so that you can actually articulate what you just did, because you couldn't have done that if you weren't paying attention. That's all I can say.
Yeah,
So
like I
good
said,
for you. That was a
yeah,
compliment, bud. Yeah.
I appreciate it because I've been in it too. I've been, like I said, I've been in the whole forex game for some time and lost thousands upon thousands by doing exactly what you just said, chasing a whole bunch of different tickers and not understanding the price action for any one ticker in particular. just chasing, hopping in, hopping out. Like I've been there, done that. So now I rather just be the hunter in the woods and just sit down waiting for hours or days for that prey to come into my target zone as opposed to like creating random target zones and just shooting. Like if it doesn't retrace and come down to where I expect it to go, then I gotta set up and wait for the next opportunity. But I do know that oftentimes when I have waited, sorry, when I didn't wait, but I did have the plan, like it always played out. Well, majority of the time, it played out exactly how I said it would. I just didn't have enough patience to see it through.
Yeah, and
So
that's a very good point. I'm glad you brought it up because that is a struggle that will never go away. Like, you're always going to be challenged with the patience thing. And the fact that you're prepared to let the market come to you, like you had just described, is a giant step in overcoming all of that, right? Because if your plan comes first and you get to the part where you can be indifferent to whether the trade got triggered or not, like if it doesn't, then you know what? That wasn't meant to be. You just move on. There'll always be another trade, and there will be, and they'll present, and as they present themselves to you, you're going to be more confident in allowing certain trades to get away and becoming patient, right? And not getting sucked into that tornado of frustration, right? Just let the market come to you,
absolutely,
have your
absolutely,
plan in place, and nine
that's
times
the
out of
hard,
10, you'll be good.
absolutely the hardest part of being able to sit, wait, and be patient and let the trade play out and that there will be 50 million more opportunities that
Mm-hmm.
come along. It's just
Yep.
that you can't take advantage of opportunities if you're not prepared for it. So that's why I just find a few that look really good, and I'm a higher time frame trader. So I always start with the monthly, then I go down to the weekly and daily time frame. That's like my daily and weekly. Like those are the two that I love the most because that's where I get my directional bias.
Mm-hmm.
And then I'll go to the 4 hour. I don't go below the 4 hour anymore. I just rock out with the 4 hour and above.
That's awesome. Like we showed a lot today, I really like the 4 hour chart because I think if you're, especially for someone like yourself that's trading the time frames you are, that little bit of a cheater entry can make such a huge difference at the beginning of a trade, right? If you get a really good entry, like I often find that if I get a shitty entry, then I'm gonna somehow knock myself out of that trade. I'll get stopped out, I'll get freaked out, whatever happens, and I'll wash it. But if I get the entry that I want, then I don't even have to deal with that stuff, right? Because it's just the trade's just kind of starting to unfold. Um, so I love the 4 hour chart.
Yeah, absolutely. And it's also because it's less fake outs. Like
Yep.
usually what you see on the 4 hour, like if you see a move happening on the 4 hour, it's usually like that confirmation. If you see that doji or that pin on the 4 hour, I feel more conviction to a trade as opposed to it happening on a 1 hour or a lower time frame.
Yeah. And you obviously understand and appreciate that the lower time frame that you drop down to, the more volatility that you'll encounter, and the more that the trend might not be clear immediately. Right? The
Yeah,
four hour usually has all that sorted out.
that's exactly when I lost all my money when I started off initially from a higher time frame style. And then these guys were capital and they were making money, or at least they were showing that they were showing their winning trades and
Mm-hmm.
weren't showing they were taking. So I got caught up in the hype and started chasing, and that's when I lost all. I said, no, no, no. Let me go back to my higher time frames. And when I did that, like the calm came back. So
Yeah, and the other benefit is too is that it allows you to get yourself into trades like this, right? Where there's big trend moves that you can catch in like if to your point, if you're trading those lower time frames, chances are you're not even looking at the daily, right? Those guys aren't even looking at the daily. Like when I see a rejection at the 50 and 200 day, there's a message in a bottle there, right? Regardless if your entry was the 200 went as the 50 crossed down through the 200 or God knows what, but I mean, there's a message in a bottle there. The market was telling you that there's something going on. But if you're not looking at these longer time frames, you're going to miss all that stuff, and you're not, right? That's for sure. There will be
Absolutely.
more ROI to be in a runner with lower leverage than being in and out and in and out and in and out. I believe, because you can
Yeah.
stay in this for a long
Then your brain, like just
time. Yeah, just your mental health.
like, everything hurts when focusing so much on the lower time frame
Yeah,
because it's like each candle that pops up is just you feel like a trend is the trend is changing, and then I hate it with a passion. I'll just stick with my 4 hours, and I'll come back. I see my candle, like all right, let me see what the next one looks like, and then if it looks like something good, then I can take action after that.
yeah, yeah. No, totally agree. And price will behave like this is the weekly of what was once MicroStrategy, MSTR. I don't know what they call it now, but look, we identified these tops a long time ago when this thing
Hello,
was double topped, right?
Binarium?
And we wanted to bring it, suggested that it would come right back to where it's been before, and that's exactly what it did. Couldn't find, broke one level, found the next, couldn't find support, broke it, found the next, no support, broke it, is looking for the next. So this is just an example of where if I would have said to you, oh, when price was up here, that it was going to come back to the 200 day on the weekly, you would have said I was insane, right? I get it, but we're not insane. When price is pulling back and it's breaking levels to the downside, one after the other, you just have to keep looking down to the next one. And it will stop when it finds the largest base of that past price, liquidity, whatever you want to call it. And I believe it's looking for, we showed this before, this 200. It's not irrational for price to come back to the 200 on a weekly chart. It's just that we've been so bullish for so long that the appearance of the 200 on some charts is enough to scare people. Right? Just like this. Right? So,
That 200 is the ultimate magnet, man. Once you get from daily and above, the 200 is the ultimate magnet.
yeah. Yeah. And the point of control, too. Like, I find the point of control price, if you're trading above it and, you start to reverse, it just somehow eventually finds that level. What did oil do today? No, not much. So, here's our weekly oil chart. Do we have a green candle? Yeah. But that green candle is just, at least for now, can't seem to even challenge the 5 EMA or the T line. With the divergence, like that separation between the two levels, still fully engaged to the downside. So we still have a downtrend. There's our 61.66 level that we were out of our minds to identify as a target when it was $90 and some odd cents a barrel. But this is why we look at charts, right? Because again, it's like when you watch business news and you read a report or you hear the day's numbers and the indexes were up X percent and so many 100 points. Well, when you see that on a chart, what does it actually look like? Because that's important. Right? It matters. So if someone was to say, oh, oil closed up 0.87% for the week, is your interpretation that that's good? It's bullish? Or is bad? Or does it require further analysis? It doesn't mean diddly to me until I can see it on a chart. Right? And that 0.87% for the week was this candle. That doji candle at the top of a bull run, trading above all your major moving averages and support, with enough velocity to the downside to start to pull those short-term averages down. Now, just that doji at the top of a bull run, above all your major moving averages, support, is enough to cause you to go, hang on, I don't know if 100 is going to be first here. We might be looking south. Because that's what price is going to be drawn to. And that doji was a cue that there was something coming. Right? There's your 20, there's your 50. The 1,000-day moving average we'll talk about in a little bit. But look what price did. There's our 61.66 level. The level that everyone said hell would freeze over before you hit. That you don't know what you're doing. They'll throw all kinds of stuff at you. You don't know what you're talking about. Supply and demand matters, storage matters, blah, 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 blah. You know what? What people do with their money is a big tell. And I don't know, I don't see people buying this stuff. Because all I know is that when you see a doji at the top of a major move, this is a weekly chart, right? It's a lot of weeks. Anytime you see a doji like that at the top of a move higher, you stop and you look. And I didn't see what everybody else saw. Lower highs? Yep. What does it mean when you break 1,000 days of price action on a weekly chart? Which is like, what is it, 20 some odd years? 40 some odd years, I believe it is, something like that. Look at the monthly chart. What do you think price wants, guys? Price wants, break one level, find the next, blah, 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 blah. Here we are, still in a trend down. This is the next level down. Well, that sounds crazy. It's never been there before. Actually, it's been lower. It's tagged it many times before. It's not crazy. The only thing that's going to, is this not a failed breakout? Right? Roll up. Fail. Roll over. Take out the previous wave's low. This is a monthly chart. We showed you this on short-term time frames on crypto charts. It appears everywhere. This is how price behaves. Any asset, any time frame. Doesn't matter. This is DXY, which is the US dollar index. Did we not box in this range pretty effectively? Absolutely. Look where this found resistance. Right at this very same level, that, basically 100 square.
I think that's coming down, man.
Yeah, so, just to look at the chart for what it is, this is the 200, obviously. We've got 2 equal points in price. Doesn't automatically, we don't nail that a double top, but it's what often happens is that those that didn't sell at this high, when they get back to it, they often go, you know what, I'm not going to get caught again. And then they'll do some selling, and that's the theory on why some selling kicks in on this top. But what's our next level down from an MA perspective? The 50. This just could be a retracement, right? Coming back to, we could have the 50 and price meet somewhere in this level here. It hit the 50. I guess it's not the first touch, but we'd like to see what happens when it does. If it gets support and bounces, then it takes out that high. If this continues to fail this level, then you're obviously coming back to the 50. If it doesn't hold, you start looking south. The weekly's pretty clean. right? Like this is a big draw. If you fail, but look at this though. Look at this divergence is still completely intact on the weekly. So we're not anywhere near dead yet. At least for now. There's the 50. This is probably what it wants ultimately as a next target to the upside. What is that at? 101 spot 28. But this is like, the dollar and interest rates have been jumping all. Like it's pretty hard to get a handle. Look at this. This is the 10-year. Probably wants the 200. Is that safe to say? Yeah. It's not irrational, right? We've broken all your support. Your trend is still down. This was a failed breakout. Here's your longing into resistance, right? Failed breakout, rolls over, takes out the previous wave's low. They might put that on my headstone. He took out the previous wave's low. Right, so but that's what to expect there. What else we got? Was it you that wanted to look at Lily?
Yeah, I told you, man. I told my guy he was in it. He missed out on 50K. I told him back from that bottom level, that little consolidation at the 200. Um, I told him, listen, this Lily, yeah, that I usually there's certain charts where I feel like going from the higher time frame, but the way Lily looked like from the monthly to the weekly, I said this is going to be a monster trade, a monster, and so said, so done.
Yeah, like there's your daily signal. So I bet you the 4-hour signal probably came somewhere in there. What day is this? Friday. Yeah, probably came earlier in the week. What's the day of this? Is the 24th. Oh, back here. Wow. Look at that. That's a monster move. So good for you if you caught it. And you know what? Like when you look at the weekly, it almost looks like it's found another gear. Like I know it's just ripped, but yeah, it's not showing that it wants to back off yet.
Not at all. Not at all. That's what I told him. Like, and I was trying to put my fib extension on it because that on a higher time frame when you just look at it, what time frame is this?
Weekly. Yeah.
If you go on I think was the monthly? Go on the monthly real quick. Right.
There you
So monthly, when I was looking at it, I was like impulse correction. Like that consolidation there just looked like a bull flag. Like immediately when I just looked at it, I said, "Yo, this is going to rip, man. It's going to rip. It's going to rip." That's beautiful. And I don't think so. If running a fib extension, I don't think it reached its end. Like I think it definitely has more to go.
Yeah, like we couldn't really put this a swing low to a swing high yet because I don't think we know where the swing high is. Um,
The impulse left to the top, like right before the correction happened, and
yeah.
it's hard picking a bottom, but I would say the bottom is what's that the green? What's your green EMA? Like the lime green one?
That's the 20 SMA.
So yeah, to the 20, like right at the that where price touched the 20 all the way before,
Mm-hmm.
like see, and go down and travel down. Just follow it all the way down past price.
Okay. Down here?
Right? Yeah, exactly. Try running the fib from there to the top. I want to see what that was.
To this candle?
No, to the top of the correction.
Oh, up here.
Yeah.
Can you see that? So there's your 50%, and there's
Yeah, man.
618 is in and around the 50 on the monthly. So that's, dude, I think this thing's still got lots of room to go. Like,
Exactly. Exactly. Exactly.
you know,
Exactly.
let's put it this way: if you were in, um, you know, keep this dead ass simple. If even if you were in here, right, or down here, like either way, these are great trades. Like they are. They're great trades. Like your daily, yeah, you know, you're a little hot. You might want to take a break, come back to the 5 EMA, and then this beat goes on. But it's been a great trade. Do you got anything else you want me to look at,
No,
Esteter Tire?
that's it for me. I took my break, like I said, I took a break from trading, and I'm probably going to get back into it from Q1. But those are the type of trades that I look for when I'm scanning on like the monthly time frame,
Mm-hmm.
and just sit and wait for that. Like I'm not interested in trading often. I'm not interested in trading. Even I don't even care to trade every week. I want my monsters, and I want to like get positioned early and just let them go. Like I really want to like hone in on being a true swing trader and position trader.
Well, and I think part of that too will be taking your money at the right time, right? And I think that's where, like, this is D Wave. I know Rico's friend was into this and maybe still is. I don't know, but this thing you get a signal and it just went parabolic. But at the same time, you don't want to give it all away, right? When let's take this swing low, swing high. Like, when is enough enough? Like,
Yeah, that's definitely the hardest part as well is learning to take profits, when to take profits. That's definitely an adjustment as well, especially getting caught up and getting excited in the hope like, oh, this is going to go to the moon and it's going to go to the moon like in one shot, and you end up back to your entry and all this other stuff. So I've been through it. I've been through it.
yeah, like this thing has basically come back all the way back here. Like, wow. Like, you don't want to give that stuff away. That's 20 some odd bucks a share.
That's sickening. That's sickening.
At least
But
I
I have
don't. Yeah.
a strategy that that I have is that always make sure that I have a position that's enough for me to take profit and leave a runner. And
Yeah.
whatever happens, the runner could come back to initial entry, and I wouldn't care. But I would definitely have to secure um, profit and just leave a runner.
Yeah. Yeah. No, I think leaving the runner is a good idea, um, and taking your money when you can also a good idea. I'd like to see guys do it more, but I digress. But yeah, this chart here, I'm still not convinced that this is over. I think you're going to meet resistance at the 20 MA weekly, as well as you got to deal with the T line and the 5 EMA in there as well. This could be an area of rejection, which would pull you back down into this gap and then fall into this stuff in here where the shelf is, right? That's where you would hopefully find support. If you don't, hello to this gap in here, making the point of control, uh, puts that in play. So breaking the 50 puts all this stuff in play. And that is a literal round trip, right? Like, you don't want to do that. And no, that's not a crypto stock either. Like that's a stock. So everything we need to know is on our charts. Right? We might not like what we see sometimes, but everything we need to know is on our charts. So we've had some real good green days. Let's see what happens to those days when we get in here. Will we get rejected? Will we break through? Little more sign of life for Solana at that level. But let's see what happens at the 20. This is what I would be looking for on my daily charts right now with the majors, is just like this. What's happening at the 20 MA? Are you going to break? Here's ETH, similar look to Solana and Bitcoin. And what you're looking for is just going to be a retracement higher that ultimately fails at resistance, and then you come back and take the previous low out. That's what you're going to be looking for on your daily charts. So I don't want to take up any more of your time today, guys. I know it's your Thanksgiving and you've got friends and family and food around, and you don't want to waste any of that. So I will let you go for now. We will catch up live again on Tuesday of next week and Thursday of next week. And if there's anything else you guys need in the meantime, of course, you're welcome in our Telegram group, and you can reach out to me, of course, on Twitter, and hopefully we'll see you on YouTube as well. You can like and subscribe to those to my YouTube account, and you won't miss any of these videos. And you'll be able to pretty much self-taught by the time you're done. All those for sure. So have a happy Thanksgiving, everybody. We will talk